Good morning. It is Tuesday, December 11th, 2018. Another great opportunity to get together at the Forex.Today YouTube channel as a community of foreign exchange traders. Trade the markets. Let's go. Morning, Jimbo. So guys, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Very nice to meet you. Been trading currencies a very long time, and I'm here to help. I'm here to share, and I want you to succeed. If you're benefiting from these educational webinars I do every day after day after day after day after day, please show it by paying it back. Please visit TradersWay.com and open an account today. So I've already woken up, showered and shaved, made coffee, studied for my exam later today, and then I found myself doing this. All right, if you have a straight line depreciation on your books, but for tax purposes you have an accelerated double depreciation, and then there's a so I've taken a nap too. So with that being said, it's not going to be a long webinar today, I hope. I need to, it's Harvard Business School, so they do it differently. I have to have it like be in-person proctored, so I have to like drive to North Atlanta to pay some idiot to stand there and watch me take a test. So anyway, so I got to get that done, and that'll be a relief, right? Another one done, on to the next one. So anyways, the markets are moving again. Another opportunity to kill the pound. What do you stink? Smell like a plan? Pharaoh says, how long did I sleep? You know what? I've been having problems with my Google phone the last maybe 6 months. I'll do things like, wake me up in 30 minutes, and it says, you know, okay, set in your alarm for 30 minutes, and then nothing, it doesn't ring. So anyways, my wife woke me up, so it was 25 minutes or something. Well, with that said, let's just get going, huh? But maybe wish me luck. It never hurts, right? Praying never hurts. Oh, what's the photo above my head? That's my license plate that says, I love Forex. But I guess you can't see it. Maybe if I go back. Can you see that? It's a real license plate for my, I had a convertible in California because I lived in California. Of course you have a convertible. That was a long time ago. All right, so one thing I want to show you, that there is congruency with the pound. And that's an important thing to check at the beginning of any new trading period. You want to make sure where you're at, okay? There's a few things we can essentially learn from these things. Pound yen hit the monthly target and stopped falling. Pound Swissy hit the monthly target and stopped falling. Euro pound, see the the denominator and the numerator are switched. But anyway, so it went up, hit the monthly target, and stopped rising. So we know yen and Swissy and euro are somehow related. They're about the same in strength, or have been. Now, I think this hit the exact target in reverse, so we have to throw this in now, so dollar. So we can conclude that the dollar, the yen, and the Swissy for sure, right, are all about the same strength. And isn't that what I teach you about risk on and risk off? That in a risk off scenario, dollar, yen, and Swissy should all strengthen. Just a nice little observation, right? Pound Kiwi is, I think we missed it by a lamb's tail. I think this is the monthly. We missed it by like 20 pips. So that's interesting, right? And then how about the Aussie? Still on M2. So we've learned that pound and Aussie are both quite weak relative to everybody else. Cool, right? Somaliland? You're in Somalia? Mogadishu? Really? Wow. Well, welcome. All right. Remember in Black Hawk Down, they kidnapped the general, and he's sitting there smoking his Cuban cigar. He's like, "Let me tell you about your Arkansas boys." He's like, "I'm from Texas." Go back to your comfortable life in America. Yeah, I like that. Does anyone know the scene I'm talking about? All right. Yeah, sorry, I'm wicked sleepy here. All right, how are we doing here? Still sticking with the plan. Duma? Yeah, Jimmy knows it. All right, let's just stay with the game plan here. So far, so good. You forgot that scene? It's the scene where I think it starts out where there's a UN envoy of humanitarian aid, and they get there, and there's a huge crowd of people, but then a truck with guys with AK-47s come in, and they steal all the rice and the wheat and stuff. And so anyway, so the Americans send in some helicopters, and a sniper with a 50 cal rifle from a flying helicopter comes across this envoy G55 wagon and everything, and you know the leader of the Somali rebel armies in there. So they put a 50 cal round right through the engine block of this Mercedes, and of course it pulls over, and they come down, and they just capture him. You know, this guy's not afraid at all, so he's just in detention with the American officer, smoking his Cuban cigar and explaining how Africa works. Yeah, I figured it was Hoodoo. He's like, "What's he talking about? I'm not in Somaliland. I don't know where that is, brother." Hey, Daniel, is our thing taken care of? But anyways, I figured as what you. Wow, I know the world quite a bit. I don't know where Somaliland is. Where is it? In Arkansas? Sorry, man. Look, see, I love learning new things. I'm gonna Google it. Good, thank you, Dan. I know we're up on the time limit, and well, but anyways, thank you for your help, brother. Thank you. Anyways, let's go. Keep me focused, guys. I'm a little fried. All right, EuroCAD. Right. Oh yeah, we talked about this on Monday, right? Chow Ching. Cool. Here's the problem now. We've now double touched our target. All right. So on the first of the month, we were down in this area, which is a buy for bulls. And then based on that buy, this, I guess I should use my drawing tool. Based on this buy here, this is supposed to be the top. Isn't that wonderful? Oh, there you go. So it's within Somalia, but not Somalia. All right, well. It's way different. Thank you, Mr. Highvolt. Okay. So it's one of these things. We're so early in the month, right? What is it? What did I say? It was the 11th? And we're double done now. So is it time for the euro to weaken? Is it time for the dollar, the Canadian dollar to strengthen? You know, I don't know. And again, CAD's probably going to move based on oil, and oil's going to need a month to check compliance, like we talked about yesterday. Remember the two things when it comes to OPEC cuts, waivers, and compliance. Right? The other way you could do it is what? 1 minus taxes plus EBIT plus depreciation minus CapEx minus the change in working capital. Is that, oh wait, that's something different. Oh. Things you gotta. So how is this going to turn around? Should you just stop trading? You know, it's December. We're almost halfway through December. Like, maybe that's your play. Maybe you've made your money, right? I mean, that's the beautiful thing about this here. This entry down here predicts a top here. And, you know, so like by definition, what was supposed to happen in December has happened in December. I don't use average true range. Okay, Langa, so I apologize. I don't use average true range. I used something else like 100,000 years ago, and I only used it for maybe a year, and then I dropped it. But I think it may have been, instead of ATR, it may have been ADR. But, I don't know. It's not something I use, nor therefore I don't really see it as necessary. Huh? Well, we have a Fed meeting, right? When's the Fed meeting? Bet you that Fed meeting is going to be important. So the Fed's going to say, oh, we're raising interest rates one more time, but we'll probably raise significantly less in 2019 than you thought. Okay? And that could be your Santa Claus rally. It's coming up super fast. Google it. Shockingly fast. But these things are important. Okay? Because they're going to confirm it. Taking a look at our oil. We've been here for 2 weeks now. Actually, 2.5 weeks now. So good call on the bottom. Okay. We've had this price as our bottom for 2 weeks now. Triple bottom? Well, Langa, the way you can, the real answer to that is go to the, do the search for the New York Stock Exchange holiday calendar. Okay, that's the one you want to look. That's the official one. But the big boys tend to want to take personal time off and fly to the Caribbean with their mistresses. So there are sort of non-official holidays as well. But yeah, if someone needs to make their year-end bonus, they need to hit some numbers to make their year-end bonus, they'll work. But like Christmas Eve, probably not. Boxing Day or the day after, probably not. Okay. Thank you, Michael. So, we're waiting for that to budge, and maybe it's the Fed meeting that budges this. Because then it's a demand equation, right? Up and down now, this whole move is here and here and here, and here is supply. But there's been some demand, like slow down in Europe is slowing down China, which is slowing down, right? So there's that. But a Fed that says, basically no more tightening. I mean, there will be tightening, but it'll be less. Then that could be good. I mean, it's certainly not a bad thing. Is that right? Did it work, Pharaoh? See, I tell people to sleep in the bathtub because, like, there's almost saving grace in what you did, because then you can say, hey, look how awesome I am. I went 36 hours without eating because I lost money. But it's almost a positive negative, But there's just no glory or dignity sleeping in a bathtub, especially if you have a loved one. if you have a spouse, for example, and your spouse is making your bed, she's putting pillows in there and getting your little blankie, and you're going to sleep in the bathtub again because of another dumb trade, right? There's just no dignity in that. But anyways, so I hope it worked, Pharaoh. Yeah, no, it's amazing how important it is. Yeah, no, sleeping on the couch. I mean, that's nothing. Who cares, Michael, right? Oh my God, you got to sleep on the couch? Yeah, you sleep on my couch, it's a privilege. It's nice. But yeah, sleep on the bathtub. I used to tell people, this goes all the way back when I was managing sales teams of several hundred people. And I would make, I'd make people sleep in their car until one night it actually got cold enough in California where one of the guys said, you know, I almost died out there. I'm like, okay, I better not say car anymore. So I said, sleep in the bathtub. The other way to do it is sleeping on the kitchen floor. If you got tile, it just can't be comfortable. But the bigger part of that, besides the uncomfortableness, is sharing sharing the I don't know, the pain with somebody else. Hey, thank you, Raza. Welcome to the family. Sharing it with someone else because you know, if you know me, you've heard probably every story I have, but one of the stories I have is the suit of shame for people working at, you know, my hedge fund. And the embarrassment of wearing the suit of shame is worse than anything, than money, than cutting off of a finger or something. You know, public humiliation is a huge, or let's say the prevention of public humiliation is a big motivator for the human species. And so, yes, sleeping in a bathtub is very uncomfortable, but so is losing a ton of money. But people lose a ton of money all the time. So somehow in their psyche, they accept it. And they say things like, well, you know, I put $5,000 into a trading account, and if I blow it up, well, then I'll just go try something else. So they put $5,000 into a trading account, they blow it up, and then they go somewhere else. But they already justified it. But if you said, I'm going to put $5,000 in an account, and if I blow it up, I cut my pinky off. You may be more motivated than the 5,000. And you know what? It could be 50,000. I saw someone lose $20 million in a week. You're really like, and he's like, it's just 20 million. So there needs to be more, and then there's the personal discomfort. If you've slept in your bathtub for 2 or 3 times, you get to the point where you'll do extraordinary things not to have to sleep in the bathtub. And the interesting thing is, the extraordinary level I want you to have is not take mediocre trades. Yes, it is, Joe. Right? So you're right. So having someone know that you screwed up is important, I think, to getting to the next level. And that's why working for a fund is often very good, or working with a team is often very good, because you have managers watching you, and it changes your behavior. It's called the Hawthorne effect. So your behavior changes because you know somebody's watching you. Well, something like that. It comes down to your planning, Michael. So Michael says you shouldn't take a trade unless it's 50 pips. Well, I also scalp. The thing is, you should have an absolutely, totally, clearly defined, written out, you can see every tick in your head plan. Most of, I think, people's problems is when they just start winging it and they're going with the flow, and they're throwing down some trades, and that's where you run into trouble. You get yourself into a lot of mediocre trades, and then mistakes start happening. But as Pharaoh alluded to, the worst thing when you start to trade like that is that you lose your discipline. Okay? And what will happen is you will become completely 100% undisciplined. And you're laughing at me now. Never happened, Wayne. Sure. So you're either 100% disciplined or you're not. You're either pregnant or you're not pregnant. You're not like a little bit pregnant or mostly pregnant. Okay? So you're either disciplined 100% or you lack discipline. So that's why it's important to keep it. And therefore, you do not have mediocre trades. So define mediocre. Wait, you say, Wayne, is it minimum 50 pips? No, but you should have extraordinarily well-planned trades. And you should be shocked that you didn't make money. I don't care if it's 15 pips or 50 pips or 150 pips. That's just the difference in planning, right? That's the strategic difference. But you should be like shocked you didn't make money. And it shouldn't even be your fault. You're like, what kind of idiot sells at the M2, right? And if that's where you lost money, then so be it. And then you get out of the market. Because you only enter the market when you have a full confidence in making money. Okay, and there's the difference. So maybe what you should do is visit your father-in-law, borrow $50,000 from your father-in-law, and then start trading. You might lose your $50,000, but you're not going to lose his $50,000. Or the rest of your life is going to get very uncomfortable during the holiday season. Michael, I wouldn't say it's all of it, but it's important. So I have a saying, there's a common saying that says 80% of success is just showing up. I say 80% of success is showing up and then not sucking. Because there's a lot of people on the planet. When you show up into a room with 300 people, 290 of them suck, generally. So it's the other ones that show up and kick ass. Those are the ones that I like to hang with. Right? Showing up and kicking ass. Anyways. Oh my gosh, what a day, what a day. Take a look at the Euro buck. Kind of feels like a range, huh? That's what she said, Rob. You guys lost me. So anyways, I moved to euro dollar, and I'm just reiterating that we're still in a range. Okay, we'll take a look at that. Okay, so anyways, apparently you guys lost me for a bit there. But what I'm trying to say is this looks very sideways. So therefore you need range trade, right? Oscillators are important. but oscillator crossovers are only important at support and resistance. Oops. Here you go. So if you get a turn in here, let's say you use some sort of oscillator, RSI, stochastics, whatever. If you got a turn north here, thank you for subscribing, guys. If you took an oscillator turn, I don't even have an oscillator here, but let's say you have an oscillator, you probably do. Okay, and it says, ooh, like this. This is not a buying opportunity because it's not at range support. Okay, you have to be at range support. So you would ignore any sort of oscillator. Okay, and you're starting to see this now that we're probably just in a tighter range than we were before. So you just let it wait. Okay. Yeah, if you're a bull, someone asked higher highs and higher lows. If you're a bull, you can count it like that. I'm not because this is the breakout move, and this is actually more than 100% retracement, so it kills it. So everything in here didn't happen. Okay, Highlander? But if you're extremely bullish, you might ignore that and maybe do it on a different time frame. But it was supposed to do something like this as a bull. Yeah, there's a lot of different market conditions, Michael. That's what it is. But I'm glad you're benefiting. Yep. So it's basically a fake out, is the way I look at it. Yeah, I'm even kind of like reviewing it in my mind, like a bear still has this in mind, huh? That's the weekly swing. Okay, now we're just holding tight, but I think you remember when I set this trade up for you, I said the problem is we've hit our target. So it's only that if you think we're heading way up here, that you would do it. So we had a good full day of a rally right off my line. Look how beautiful that is. But that may be it. And bears, if you're selling gold, this is an excellent opportunity. Okay, because you have a double top at exactly the price we expected back here on the first day of the month. Our analysis told us this 1250 was a big deal. Now, I had it going a little higher to the top end of the range, but that's legitimate. A double top is a reversal pattern, and on that exact pivot, that cannot be ignored. Okay? It's not what you want, it's just what it is. I was requested to take a look at USD yen. Woke up this morning as a miracle occurred. It's the most beautiful trade I ever. All right. Yeah. Looks dead to me. Do I like playing chess? Yeah. I had a roommate in college who was an expert at chess. And he had a twin brother or a very closely aged brother. And as kids, they would lie in the dark as they were falling asleep because they shared a bedroom. And they would play chess with their minds, calling out the moves. So nothing like that. Well, the major correction shouldn't happen until January, Alan. Okay? But we have tensions that are based off of like uncertainty about trade policy, uncertainty about central banking policy. Okay? So I don't believe it's the end of the world. Americans are making money. Companies are making money. There's lots of profits. The American economy is doing really well on its own. But we're still trying to figure out, because I don't know why we're still trying to figure out. But the rest, all the people at CNBC and Bloomberg say that they're trying to figure out the Fed's next move. I explained to you how to calculate neutral, and therefore you know that we're very close to the neutral rate, maybe even at the neutral rate. So I don't know what the debate is. But anyways, we're still trying to figure out where the Fed is in their policy, right? So once we got that figured out, that'll go away. And then trade tensions, of course, between the two largest economies in the world. Okay, that matters, right? And then Brexit and Europe, blah, 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 same old problems. So I don't know. I think that's the biggest problem, actually, quite frankly. You know, the UK is a mess and the European Union's a mess. It's just a mess, a big mess. And that's not good for business. Okay? So I don't mind declines, especially when we're approaching the top of a market. There's going to be declines. People are going to take profit. Okay? But I don't, when you look at the economic data, like you have to ask yourself, like, let me reverse this. Okay, let's talk about this intellectually now. Whoa. And then I think I'm going to bail early today. Just, I don't know, I could use extra time. But okay, let's talk smart here. Let's have a conversation you won't hear about it by experts on TV and all this kind of stuff. Let's talk about managing $1 billion. How do you make the decision whether to stay in or stay out? So, what makes a market reverse versus just correct? Well, first of all, correction is essentially profit taking. So will there be profit taking right before the end of the year? Yes. Will there be profit taking right after the new year? Yes. Why? Some people want to take profit and pay taxes this year. Some people want to take profit and pay taxes in April of 2020. Most people want to pay taxes in April 2020, not April 2019. So therefore, in the beginning of January, there's going to be a large and quick and fast stock market decline. And it'll be shocking. It'll be on all the headlines and news. And people will come out and they'll say, we're going to the Great Depression. This is the unstable, blah, 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 blah. Dude, lots and lots of people in the stock market are making tons and tons of money. So they sit down with their tax attorney near the end of the year. And the tax attorney says, well, do you want to pay taxes this year or in 2019? Or would you like to pay the same amount of taxes in 2020? And most people say, well, I need the cash soon because I want to buy a boat and I want to go on a European vacation and I want to buy a bigger house and I want to buy another Rolex and I got to get a Porsche. And all right, everyone's got the needs. So the tax attorney says, okay, great, I understand that. You have two choices. Get out on December 31st, and you'll get all your money that you need to buy all this crap. But you'll pay taxes in April of 2019, in like 5 months. Or if you could possibly wait one more day to get your cash, we can cash out January 1st, and you'll pay not in 5 months, but in 17 months you'll pay taxes. And then most people will say, oh my God, really? I can defer my taxes for 17 months? Uh-huh. Right? So anyways, you get down to that kind of thing where some people will choose to take profit in 2018. And those are probably going to be fund managers that want to get paid, and because they're not mark to market, they're going to have to take profit in 2018 so that they can hit their year-end bonus. Okay. If it's your own money, you're going to say, well, I'm going to take some profit in very, very early 2019 so I can defer my taxes an extra year. Great. But profit taking will come. It's the whole reason you're invested, so you can make money. And then, of course, everyone that cashed you out in 2018 is going to call you up in January and want to churn you like crazy and get you back into the investments. All right, so that's that. How do you know if that decline is a sign that the whole stock market's going to crash, or if it's just profit taking like I explained it to you? Well, what makes the stock market go up? Sales, yes. Profits, yes. Today's profits or future expected profits, yes. Profits. What do you need to make a profit? Right? You need rev minus cost of goods sold equals net operating income minus some other expenses minus some taxes, and then boom, you got good old American profits or retained earnings or whatever you want to call it. Great. So you sell a lot of stuff, it cost you less to make it than you sold it for. Then you got a bunch of other middle managers sucking the life out of your business, but you have to pay them. Then you got to pay Uncle Sam for the privilege of selling crap to their people. And at the end, you should have profit. Cool. But if your revenue falls, but your cost of goods sold go up, then you barely can afford all your other stuff, and you don't have a profit. Great. Thank you, Lopez. So, that's just accounting. Stuff I learned at Harvard Business School. Isn't that nice? Okay. So, what the stock market is about investors putting money in or voting with their money about the future for a company. Is the future going to be better? If so, you want to own the asset now, right? So company A, you're buying it at $12 a share, but you think they're going to do well in the future. So in a year or two, you think it'll be $16 a share. And the asset will appreciate. And you know they don't pay you any interest and they don't pay you any dividends. You simply buy it at 12 because you think it's going to go to 16. Why do you think it's going to go to 16? Well, we have accounting standards in the United States called the General Accepting Accounting Procedures. And all that gets put into annual reports. And it's required by law to share that with shareholders. And of course, anyone interested in investing can get their hands on this. And inside we'll have the financials. And you'll look at things like, what are your revenues? What's the cost of goods sold? And then what other expenses do they have? So you can have a lot of revenue, guys. Because, right, But what if it cost you almost as much or maybe the same? It costs you $100 to sell a widget or to make a widget, then you sell a widget for $100. And you're selling a heck of a lot of widgets because someone else is selling them for 130 because they need to make money. Well, you're making money too, but it's not good because you can't pay for all these other expenses like rent, right? Wages. See, rent and wages do not go in your cost of goods sold. Cost of goods sold is just like iron ore, coal, plastic, the stuff to actually make the actual widget, right? So your revenue has to be higher than the cost of goods sold so you can pay for rent and wages, and then after that you got to pay taxes, and then after that, maybe, just maybe, you'll have some profits. So you're looking at the annual report now, and you're like, yeah, I like the revenue, it's high, and it's on a trend of going higher. Cost of goods sold is less than revenue, and it's on, let's say, a flattening curve. So they're making more and more, and their per unit cost is actually going down. So their future profits are going to be good. Well, at least gooder than they are now, because there's going to be a widening gap between revenue and expenses, basically, right? So you vote with your money. Why this big story about business? That's all the stock market is. It's assuming people have gone in and looked at USD Yen Corp, if this was a business, looked at those financials and said, I think their profits are going to go from here to here, and therefore I'm going to own them. So what makes a stock decline? Well, the opposite, like we just talked, okay? Like we just talked about. So they have revenue. So a shoe store has revenue from selling shoes. They have cost of goods sold, which is their inventory of shoes. Then they have the rent for the store, wages for the employees to stand around saying nothing to you while you shop. And then what? Well, a shoe store goes to a bank and says, can I borrow $1 million so I can buy shoes, okay? So I can sell them in my shoe store, okay? When the Fed has jacked interest rates up, it makes this $1 million more and more expensive. So you get the concept, like if shoes go up in cost, right? Stores find it difficult to raise prices. They say prices are sticky because there's lots of shoe stores in America. I forgot I was spelling. I was sticky. Anyways, there's lots of shoe stores in America, so they can't raise their prices higher than the store across the street or across town. Otherwise, people will go across town to save $2, right? So stores don't want to raise their prices, but they'll pay higher prices to get the shoes because they have to have shoes to be a shoe store. That kills their profits, right? So down here we go profit, profits fall. So we get that, right? If this year's inventory cost $200,000 more than last year's inventory, you're going to lose $200,000 in profit, not revenue. Revenue might actually go up, but your profit's going to go down, right? Or actually, revenue won't go up because prices will be the same. Your cost of goods sold, essentially, it's not real, but your financing charges make your profits go down. All right, but the other way of doing it is the finance side. If last year your interest rates on your $1 million loan was 4%, this year is 5%, and you expect the Fed to raise interest rates in the future, which you may or may not, then it goes up to 6%. Now the question is, when does the stock market start to come down? When this number is equal to the profit margin. So imagine, for example, okay, revenue over cost of goods sold. Imagine your profit margin every time you sold a pair of shoes was 5%. You're very profitable here. Well, the money is expensive, so your profit margin drops. You're not losing money. And next year, you're losing money. It's when we get to this area here, or when the market expects expenses to go up, or your cost of borrowing to go up, or revenue to go down, let's say competitors or something, or your rent goes up, or you have to pay your employees more. All of this kills your profit. Okay? All of this kills your profit. And when you can't make a profit, then your stock falls. And if we're talking about the Fed raising interest rates now, not a micro concern like your competitiveness or your purchasing power of shoes from a vendor versus someone else's, or that kind of thing. When we're talking about the minimum wage rate rising in the United States, so it's mandatory to pay your employees more. Inflation's going up, so your rent costs more. The Fed is jacking up interest rates to deal with inflation, so your cost of borrowing money goes up. A lot of that stuff is a macro thing per se, where it applies to all companies. And once we start to see, after 1 or 2 quarters, the companies used to be making good profits. Now the profits are flattening out and starting to fall. That's when the stock market, instead of doing this in January, does this in January. Okay? And just be careful. Someone says, I'm not sure a company's being invested in anymore. Seem like it's all about. Look, when you buy a stock, you're not investing in the company. You're owning a piece of that asset. But you're not investing. Like, if you bought Coca-Cola stock, the money doesn't go to Coca-Cola. You're just buying the stock from someone else that bought Coca-Cola before you. You're buying them out and you're purchasing their shares. Good. You make these things so simple to understand. Well, thank you. I'm glad that helps. So analyze some companies and ask yourself, are we in a scenario where there's a massive sell-off? Massive. I mean, like, will the stock market collapse in January? That's all you have to do is do some analysis. Do not watch television. They make money from freaking you out, but almost always, which is a lot. What you hear on TV is stupid. It's dumb. They're debating what the Fed's going to do. When the Fed says, we're moving the rates to neutral. What's neutral? Interest rates equal inflation rates. Well, what's the inflation rate? Use CPI, use PCE, pick one. If it's 2.5, then guess what? When the Fed raises interest rates to 2.5, we're there. It's not difficult. It's not a debate. So anyways, what makes a stock market crash? Well, I just explained it to you, and I think you think it's really logical. If the economy was a shoe store and they have to spend all their profits just borrowing money to buy inventory so they can stay a shoe store. They're not making profit. They're paying rent. They're buying inventory, they're paying wages, but there's no profit. And at some point, they're going to dip into retained earnings and start paying what they're losing. The company can have cash, but the cash flow is negative because they're spending more money being in business than they're making from being in business. And that's when the real stock market really starts to hit, where investors were not even paying attention to the fact that profit margins were falling and falling and falling, and pretty soon they had no profit margins. Well, we're talking about quarters. So if you got 2 quarters of negative growth or compressing profit margins, that's probably a sign where the market is mature. And if it's like lots of companies, then that's a sign that a significant stock market decline is approaching. And then when they hit negative, what you'll find is companies will report during reporting season, hey, we lost money. Hey, we lost money. Revenues are up, but we lost money. And when that happens, but right now, is that what you're hearing? You have to ask yourself, is that what you're hearing? And if the answer is no, then you have your answer. Are most American companies losing money right now? That's for you to find out. And if you can protect your net worth. I got to jump, babe. It's an important day for me. I got a big exam, financial accounting, Harvard Business School. Nice. Got to get this one done and on the books. So thank you for being on my team. I appreciate you. Peace on earth. May the pips be with you. May your profits be above average. Thank you for subscribing. Appreciate that. And the comments and your likes. And everybody, please visit tradersway.com. Open an account today, please. Just do it. Thank you for the sub, Joshua. Call you Joe L. Yeah, thank you guys. I do appreciate our time together. So, thank you for being on my team. I mean that.